Exercise 13. On January 2, 2011, purchased 70,000 shares of Bush-Tex common stock for $476,000 in cash, plus a broker's fee of $4,850. Bush-Tex has 250,000 shares of common stock outstanding, and its policies will be significantly influenced by cash. Cash now owns 28% of the voting stock of Bush-Tex. 70,000 shares divided by 250,000 shares is 28%. When an investor owns more than 20 but less than 50% of the voting stock of a corporation, they're presumed to have significant influence. The journal entry to record the investment is a debit to the long-term investment account, $480,850, and a credit to cash. Notice that this balance includes the $4,850 in broker's fees. This long-term investment will be valued using the equity method. Under the equity method, the focus is on the asset base of the investee, the Bush-Tex company. Under the equity method, when the investee reports income, the investor also reports income. When the investee reports a loss, the investor will also report a loss. And when the investee pays a dividend, the investor records it as a return of their investment. On September 1st, Bush-Tex declared and paid a cash dividend of $3.20 per share. 250,000 shares multiplied by $3.20 per share says that Bush-Tex has paid out a total of $800,000 in dividends. The asset base of Bush-Tex is smaller by $800,000. Cash, as a 28% owner of Bush-Tex, now has an investment that's worth 28% of $800,000 less. A dividend is recorded as a return of an investment. The journal entry is a debit to cash for the amount received, $224,000, 70,000 multiplied by $3.20 per share, and a credit to the investment account, $224,000. On December 31st, Bush-Tex announced that net income for the year is $883,275. Net income means that there's been an inflow of assets into Bush-Tex. Bush-Tex asset base grew by $883,275, and cash, as 28% owner, is going to claim 28% of that income. $883,275 multiplied by 28% is $247,317. The journal entry is a debit to the investment account, $247,317, and credit earnings from long-term investments, $247,317. June 1, 2012, Bush-Tex declared and paid a cash dividend of $3.45 per share. Under the equity method, a dividend is recorded as a return of the investment. Debit cash for the amount received, 70,000 shares multiplied by $3.45 per share, $241,500, and credit the long-term investment account for $241,500. On December 31, 2012, Bush-Tex announced that net income for the year is $990,184. Net income means that the asset base of Bush-Tex has increased by $990,184. And since Bush-Tex has reported income, then cash will also report income. Debit the long-term investment account for 28% of $990,184, $277,252, and credit the income statement account, earnings from long-term investments, $277,252. So to summarize, when Bush-Tex reported income, cash reports income, earnings from long-term investments. Had Bush-Tex declared a loss, cash would have also recorded a loss. And when Bush-Tex declares and pays a dividend, cash records it as a return of the investment. The balance in the long-term investment account after the reported income is $539,919, at which point cash then sells 7,000 shares of Bush-Tex for $366,098. Cash is selling 7,000 of the 70,000 shares owned. 10% of the investment is to be sold. The journal entry is a debit to cash, $366,098. Credit the long-term investment account for 10% of the balance, $539,919, multiplied by 10%, is a credit to the long-term investment account for $53,992 and credit gain on sale of investments for $312,106.